Hey guys, a real quick recording. This is the Chapter 11 mock exam question. So I've got it up here. It's a depreciation question, so review. I'm going to buzz through it really quick. We did a couple in class, and hopefully this is one of the concepts that's a little more straightforward from the chapter. I will do some other videos where I'll look at the impairment stuff. So purchase a truck, gain attention to the date. It's March 1st. Cost. We have a physical life. Again, I think I said I was never going to include those in questions, so let's ignore it. Estimated use, and then it says our policy is to trade in all trucks after 5 years. So that's how long our useful life is, and the residual after 5 years is 10,000. So that's what we will be using, and it's also a class 10 asset for CCA at 30%. And the question wants us to calculate depreciation for 16 and 17. So we've got this math that we had on every question. So if I'm looking at straight line, my cost is 60,000. My residual is 5,000. So my depreciable is 55. Let me just make sure I have that right. No, the residual's 10. And my useful life is 5 years. Hold on. 50,000 depreciable, useful life 10. My depreciation is going to be 10,000 per year. Well, I'm going to do my activity based as well because it's the same math. Right? I've got a $60,000 asset with a $10,000 residual. So I've got 50,000 depreciable. It's just now my useful life is based on kilometers, and here we're expected to drive at 180,000 kilometers. So for straight line, my rate's 10,000 a year. For activity based, it's 27.8%. You can round that wherever you want. So 2016. I'm just going to organize this. So I'm going to straight line, activity, double declining balance, and CCA. And I'm doing 2016 and 2017. So for straight line, it's 10,000 a year, but I acquired it March 1st. So again, if I count the months, and be careful, March 1st is different than March 31st. So I'm going to depreciate it for the month of March. So I've got March, April, May, June, July, August, September, October, November, December, 10 months. So 10,000 times 10 months out of 12. And then for 2017, it's just the 10,000. Activity based on the kilometers, so I've got 10,000 kilometers in 2016 at a rate of the 27,778. 2017, I've got 50,000 kilometers. Okay, so again, I'm not too hung up on format. I kind of like commas with no decimals for these answers. Double declining balance. So first of all, if I need the rate, and that's equal to 1 divided by the useful life of 5 years. And I'm going to times that by 2 because it's a double. So my double declining balance rate is 40%. So In my first year, it's my carrying amount. My carrying amount is my cost times my rate, and again times 10 months out of 12. Notice I did not use the residual in this calculation. I don't use residual in the math for double declining balance. For 2017, my carrying amount now is my cost of 60 minus the depreciation I recorded last year, and I'll take that times my rate. Okay? And in CCA, very similar to double declining balance, except the rate is set. And in this case, it's 30% for this class of asset. And in the first year, I take a half. So 60,000 times 30% times half, 0.5. In the second year, oops. Okay, it's my So again, this is equal to my carrying amount. So my cost of 60,000 minus the CCI I recorded last year. It means it's on my books for 51,000, and my tax books. We call that the undepreciated capital cost. Not that you need to know that. And I'll take that times my 30% rate. Okay, so I think key things: straight line and activity based, relatively straightforward. Declining balance, ignore the residual for the first few years. The residual becomes relevant when the carrying amount of the asset gets down close to 10,000, because I wouldn't take it below 10,000. So somewhere in probably year 5, I wouldn't record the full depreciation I calculate, because that would take it below 10,000. And in CCA, much the same. The one thing we might see with CCA in a question is if there's restoration costs, that does not get included. For all of my depreciation methods, it would. And in Part B, what criteria should XYZ consider when determining the depreciation method for 1 mark? Again, pay attention, it's 1 mark. So do not write a novel. What would I put? Based on how the asset is used, based on how when you get value out of the asset, anything like that would work. Okay, so give this question a try. You might want to have this handy, the answer to this when you're doing the exam, but this should all be review, and this should be pretty standard stuff, so hopefully you don't have issues with it. Any questions, let me know. Thanks.